Hello, everyone. This is Tim Melvin of the Tim Melvin Deep Value Letter and the Banking on Profits Report, coming to you from a very hot, lazy day down here in Central Florida. We've watched a little bit of baseball, we've read a few books, we've worked a nap into the day, always important on a long 3-day weekend, and it's just been a great day down here, and hopefully we have another one tomorrow. The S&P 500 is up this week about three quarters of a tenth of a percent. The All World Earth Index was up a little bit more than that with about a 1.3% return. And our Community Bank Index was basically flat with a very small gain on the week. Earnings season is behind us. These tend to be bunny rabbit stocks, as I like to call them. They tend to sit around and then you get a positive earnings announcement or a takeover and they'll move. Being the last week right before Labor Day, there was no takeover activity to speak of. Everybody's just kind of relaxing, waiting to get into the swing of things when we get back to work next week, starting on Tuesday. So, geopolitical news still kind of dominates the world stage, but everybody's sort of ignoring it pretty much. The situation in the Ukraine is worse. There seems to be confirmed fighting now with Russian troops involved and indeed Russian casualties. And Mr. Putin reminded us all this week, don't mess with us. We are still one of the world's largest nuclear powers. The West is underestimating this guy. This thing's going to escalate from here, in my opinion. We'll see how the markets react to it. I'm not going to make any predictions about that because they would probably be wrong, but we're keeping an eye out for the creation of a buying opportunity across Europe and maybe eventually in U.S. stocks as a result of that. We do have a truce in Gaza, but we'll see whether or not it holds. Been several of these so far. The ceasefires have not held. As Hamas continues to just lob rockets into Israel to break the truce, we'll see how it goes. That, along with Iraq and Syria, which is getting worse, folks. It's getting to be a nasty situation. It's escalating, I think. Great Britain is starting to get interested, I think, in taking steps towards attacking the militants ISIL in that region. We'll see if the U.S. goes along, but there's definitely a coalition being built to do something about the situation. The Mideast is always just one good blow up away from a disaster. Again, no predictions what eventually happens with markets or oil prices out of the region, but we do keep an eye on it. For now, central banks are all anybody cares about. We're going to stay on that tack until something happens to change it. Economy still, in my opinion, very much stop and start. If you look at home sales, pending home sales were better than they were in June, but they're still running well below the year ago levels. So the housing is just not providing that driving force that everybody had hoped for. Investors and cash buyers are kind of pulling out of the market a little bit. Housing prices are still going higher in spite of slower sales than 2013. According to the Case-Shiller, the national index was up about 6.2%. But you've got the investors and cash buyers. The prices, returns are not as attractive. They're pulling back out of the market. And the first-time home buyer is still nowhere to be found. So don't look for any resurgence in the housing market, I don't think, in the second half of the year. I'm okay with that. As long as we bump along here, that's really favorable for my small banks and collateral values. And I think housing needs to pause a little bit. Remember, baseline housing appreciation is not 5, 10, 15% a year, more like 1.5 to 2% a year since the end of World War II. So we don't need any of this dramatic improvement in housing prices. We need them to stay cheap and affordable so that job creation can catch up, create enough higher paying jobs that we can get first time buyers back in the market. It's a longer process than most people had hoped for, but we do not need a V bottom in housing. There's some great news, good news, I'll call it, in the economy this week. GDP was revised even higher for the quarter. Now it's up at about 4.2%, so that's good. Durable goods orders, which is fantastic. They leapt up by 22%, mostly on the strength of aircraft orders. So we're definitely seeing a pickup. The ISM Manufacturing Index was positive this month, and the University of Michigan says consumer sentiments improved, but it didn't improve enough for them to spend any money because we did also see the consumer and retail spending was down in the month. So you got this really mixed bag on the economy. It still fits into my kind of definition of it's better than it was, but it's not good. We're just going to bump along and we'll see how all that develops. And I was reading through Barron's this week. It's a really kind of interesting study early in the paper. The Russell 2000 does very, very well and these, going to have some faster growing companies in the Russell 2000. When the economy's just kind of grinding along in that between 2 and 3% level, sort of like where we are right now, that index outperforms the market by a substantial percentage. However, when it's growing faster than that, it lags quite a bit. Now, that was just kind of an intriguing study, and I got to thinking about the Russell 2000 and 3000, and I went doing a little digging to see where those indexes are right now. They're a much better, broader picture of the overall stock market, particularly to a guy who does a lot of smaller company stuff like myself. So the Russell 2000 right now, you go in, you dig, and you look, it's trading at 81 times earnings, folks, trailing 12-month earnings. So I don't think you can make even a vague case that the Russell 2000, the broader market, is cheap on any stretch. Now, if we back money-losing companies out of there, which the Russell does in their methodology, it's still trading at 21.5 times earnings and about 2.1 times book value. So I don't think you can make a case that the broader market is particularly cheap at this level. Looking at the other indexes, the S&P 500 is at 19.8 times trailing earnings. Again, that's just not cheap. And if you can make a case if you want to that, well, it's at a much lower multiple on expected earnings. But anybody that makes a decision on a guess of where analysts think earnings might be if everything goes the way they outlined it a year from now, you deserve to lose the money you're probably going to lose. That's an exercise in futility and somewhat foolish. I prefer to look at what's actually going on right now. Stocks are not cheap on that. You've still got the utilities are trading at over 20 times earnings. The S&P transports are at 18, and the S&P industrials are at 20 times earnings. So it's tough to make the case that this is a cheap stock market and we should be wildly enthusiastic throwing money at it. A cautious conservative approach of holding some cash and focusing on just those stocks that are too safe and cheap not to own strikes me as a more sensible approach. Interestingly, as I dug around the index, I did see Japan is very cheap right now. 1.1 times book value on average and just about 10 times trailing earnings. And the Euro Value Index, as tracked by Russell, is also cheap at 1.14 times times book value and 13 times earnings. And as a bonus, the European Value Index has kind of a sparkly little yield of about 3.69%. So there's sort of an income play there. We have been looking at Europe. We've added some banks, some food companies. We're always digging through Japan. We found a couple of Japanese net stocks that we thought were pretty attractive, and we've been nibbling away at those. So those sectors of the world are a lot cheaper than the U.S. and might offer a little bit more value. Now, what is cheap in the United States? If you dig stuff or drill stuff out of the ground, your stock is probably cheap. The oil and gas drillers, both offshore and onshore here in the United States in the unconventional shale fields, a lot of them are trading at stiff discounts from book value. So are the gold miners, the silver miners, iron ore, copper miners, all are cheap at this point in time. With a slow, struggling global economic recovery, that makes a little bit of sense. Earnings are very depressed. Some of the companies are losing money, but the asset values are there. I take the more optimistic view of the world that 5, 7, I'll even go 10 years from now, conditions are going to be a lot better and these stock prices are going to be a lot higher, high enough to justify purchasing at these very depressed levels and hanging on for a long period of time. So if it's a dirty business, it's probably very, very cheap. Now, of course, the other thing that's cheap is the community banks. I've just been putting the finishing touches this weekend on a new ebook we're going to have for you guys about this boring way to get rich in the stock markets. But the small community banks are extraordinarily cheap. Going through the portfolio and banking on profits, our buy list right now trades at less than 80% of tangible book value. They have higher equity to asset ratios and lower non-performing asset ratios than their peer group, and they're just extraordinarily cheap, financially sound banks. The latest two stocks that we just added in the past week had an average price to book value of just 67%. Again, in spite of being in better financial condition than most of the other banks that make up their peer group. This really is the trade of the decade. It's an extraordinary opportunity. We're going to have this new ebook out just as soon as we're done arguing about periods and commas and all that, hopefully within a couple weeks. So you can read through it and see the opportunity that you're missing if you're not involved in these stocks. Anyway, moving along, the Orioles won today. Caught a little bit of that game online. The Yankees lost, so now we're 9 games up going into September. Looking ahead, we have the Cincinnati Reds coming into town. And while I like interleague ball, I think it's kind of cool to play the Reds. I do not like interleague ball in September. This is pennant race time, folks. You need to be playing teams in your own league and in your own division. There should not be September interleague ball. Okay, sermon over. Then we we have Tampa coming in, we have Boston coming in. Then we have a 4-game series with the New York Yankees. In fact, in September, we have 8 games against the Yankees. We have to stay sharp, play great baseball in order to, we have a big lead, but we're going to have to play well to keep it, and hopefully we can do that. And for the first time in an extended period of time, we will be the AL East champions for 2014, heading hopefully into the World Series. Anyway, the Angels, this was supposed to be a great race. The Angels just swept the Oakland A's to go 4 up. Oakland's players and managers have been expressing some embarrassment and apologizing to the fans this afternoon because the LA Angels did quite a number on them over the weekend. Now we're looking at that AL Central race. That's tight. Right now, the Kansas City Royals are 1/2 of a game up on the Detroit Tigers. The Royals play later tonight. But so look right back there, 3.5 games back, just lurking and waiting and playing pretty good baseball right now are the Cleveland Indians. And wouldn't that be a shocker to everybody if the Royals and the Tigers chewed each other up in the weeks ahead and the Indians slipped into this thing? That would be a huge boon for Cleveland. Now they've got LeBron James coming in. They're going to do well in basketball. They're doomed in football at the moment, I'm afraid. But if the Indians could get into the playoffs, that would mean quite a bit for that city. Okay, more preseason football in the last couple weeks, and unless you're one of the guys who played well enough to make the 53-man roster or played poorly enough that you were cut from the 53-man roster, the games didn't mean a thing, but we are going to tee it up starting this week. I believe the kickoff game is Green Bay and Seattle, which could be quite a football game. I like my Ravens' chances of winning that division and making or just making the playoffs as a wild card, but I think they can win the division. And looking ahead, I really think that the best team in football this year is probably the Green Bay Packers. They upgraded their offensive line, and that's going to be the key. Eddie Lacy's going to have holes to run through, and Aaron Rodgers is going to be able to sit back there and pick defenses apart. So my preseason pick for the Super Bowl this year is going to be the Green Bay Packers. Now, we did get the kickoff of college football this week. What a great weekend. Navy came out. They were able to run very well. They played extraordinarily well against Ohio State. They did finally lose the game with Ohio State pushing ahead later in the game. It's very tough for Navy, who's going to be undersized against a number 5 team like Ohio State, to stay competitive when you're getting beat up by bigger, stronger guys for 4 quarters. They made a great showing of themselves, and that offense racked up some yards. I see another Commander-in-Chief trophy and a solid victory over Army in the team's future. My wife's favorite team, Texas A&M, looked really good. I think the pundits may be underestimating this team, having them ranked 22, because they whipped up on Steve Spurrier's South Carolina Gamecocks. It was not even close, and they did not miss Johnny Manziel at all, as the new quarterback broke Manziel's record in his first start under center. Now, Florida State fans, you need to be concerned. Your team looked very lackadaisical, very pedestrian. They won the game, but they were playing Idaho State, so that was sort of the Oklahoma City Cowboys. It was Florida who was rained out against Idaho State. Well, Oklahoma City gave you guys all you could handle this past weekend, and you better get a lot better before you get into the meat of your schedule, or no second Heisman Trophy, no back-to-back national championships. So, anyway, very interesting. Notre Dame, by the way, one of my other teams. You can't grow up as an Irish Catholic kid in the 70s and not be a Notre Dame fan. They looked pretty good against Rice. I think they're going to be really competitive against all of the bigger schools and make a run into that playoff this year. Let's hope so. All right, guys, it starts this week. The fall publishing schedule is coming out. It's ridiculous. All right, just next week. It's a new Lee Child. Lee Child comes out with a new Jack Reacher book. That's a fantastic series if you've never read them. Tom Cruise was the most unfortunate choice ever to play Jack Reacher. How you get Tom Cruise to play a 6'4", 250-pound ex-military guy like Jack Reacher is beyond me, but the books are fantastic. Clive Cussler, if you're a fan of his, he has a new book coming out this week. Tana French has one coming out in her excellent series, The Dublin Murder Squad. Faye Kellerman has a new book coming out. Dennis Lehane, one of my favorite authors, has a new book this week. I'm looking forward to that. And Kathy Reichs has a new Dr. Bones novel coming out. And one that caught my eye in the biography section this week was a book by an 86-year-old woman named Betty Halbrechts. Now, the book describes her This is her memoirs. And she's described as a tough old broad right out of Stephen Sondheim's repertoire. And the review cites her Damon Runyon-esque husband at one point. This sounds like a must read. She goes on from what I guess is the wreckage of her marriage to be a personal shopper who apparently takes no guff and tells a pretty strict flat on truth, as in, yes, that dress does make you look fat at Bergdorf Goodman, the luxury store. I'm actually intrigued. I have to read this book after reading just the jacket clippings. Sounds too good not to. Nate Jackson, the former tight end of the Denver Broncos, has a new book coming out called Getting Up Slowly. And again, it's the jacket blurbs that are catching me on this one, and I'm going to have to order it. It's described as fast-paced, lyrical, dirty, and hilariously unvarnished. Now, when you throw all that into an NFL football book, you know I'm going to read it. So we're going to order that one. Now, as good as all this is, the week after this makes it look insignificant. There's just this wave of books coming. Not this week, but next week, including, of course, Guy Spears' Introduction to Value Investing book, which I'm the education of a value investor. Just went momentarily brain dead there. I'm really looking forward to that one. But the release of recreational fiction coming out on September 9th is absolutely ridiculous. I will remind my friends in the Northeast and the Midwest portions of the country that you probably want to start loading up on these books. You're going to want to build a deep bookshelf, probably check and fill the liquor closet and the wine cabinet as well, and of course load up on lots of toilet paper because you're just a few short weeks away from cold, nasty winds and icy rain and snow and all that fun stuff. And I'll tell you, I'm still good. I've got several months of going over to places like New Smyrna Beach, and we're heading down to Sanibel here in a few weeks. So it stays warm pretty much year-round down here. I'm still going to do a lot of reading, but you guys might want to make sure you're super stocked up because guess what? Winter's coming. Anyway, in the week ahead, we have some market-moving stuff. Vehicle sales come out. That's going to impact the automotive stocks if you own any of those. The beige book, always an entertaining read. We're going to argue about who meant what by which sentence and where the period went, where the comma went. It'll tell us what's going on in the economy in the U.S. The basis has to be it's getting a little bit better. We feel a little bit better about employment, but we're still not seeing any real wage growth. Some segments are going to be better, some segments are going to lag. It's all going to fit into that better than it was, but still not good category of economic growth, in my opinion. Toll Brothers earnings come out. That should be a good report because they give us a good look at what's going on in the upper end of the housing market. So good numbers there, I think, are probably forthcoming as the upper end has been the one strong segment of the housing market so far in 2014. So we could actually see really good numbers out of that. But also Bob Toll is a plain-spoken guy who will give us a really good look at his opinion of the housing market. He's been in the business a long time, has a tendency to be right about the development, so I at least will be watching very carefully to see what he has to say. We have a interest rate decision from the Bank of Japan and the Bank of England this week. They're expected to keep rates exactly where they are. The ECB is also out with a rate decision, and everybody expects them to lower rates just a little bit to give a little bit more stimulus to that very difficult European economy. Should they take no step, you could see some significant selling in the Eurozone, which we would like to see because we've got cash across the board in the portfolios, including international, and wouldn't mind picking up some cheap stocks for the long term in Europe. So we'll be watching that decision closely. You have a NATO summit. That, of course, is going to be very important because of everything going on in the Ukraine and Russia, and that will be the top subject under discussion. Unfortunately, this week, there's way too many Fed officials wandering around unescorted, giving speeches about their opinions of the economy and interest rates, and every time one of those guys opens their mouth, it's a potentially market-moving event. So we'll kind of track the headlines and see what goes on there. Anyway, that's all down here in Central Florida. I'm going to go continue an unbelievably lazy day. I got a couple good books of recreational reading, section or two of the Weekend Wall Street Journal that I have not finished yet, and maybe we'll catch up on some movies, or if the wife's reading a book, maybe we'll catch another baseball game tonight. Anyway, that's all, and we'll talk to you guys next week.